Hey everyone, me Kevin here. Here is a synthesis of everything that Cathie Wood just mentioned on the Bazinga Power Hour. All right, let's get right into it. So first, Cathie Wood over at Ark Invest, many calling her the millennials Warren Buffett, suggests that on Tesla, you have to remember Tesla has 4 big barriers to entry. They have artificial intelligence, better battery technology, more miles driven, and over-the-air updates. Now, these are the 4 barriers to entry that were really popularizing Tesla back in 2018 and 19, so some of these, like over-the-air updates, maybe not that big of a barrier to entry anymore as more and more automotive manufacturers are adopting this. However, Cathie did tease that she has a big new model coming out for Tesla within potentially the next 2 weeks, and she is going to raise her price target. Will it be $3,000? Will it be $7,000 again? Is she going to go $10,000. Who knows? We'll have to wait and see on this, but I'm tempted to make my own Tesla model or update my own Tesla model before she does. A big weight that she's including in her new valuation, folks, for Tesla: autonomy. Autonomy and the automation, the full self-driving betas that we've been seeing. She is blown away by these. So stay tuned. When you see Tesla at 666, it's a buying opportunity because it's obviously gotten so low. It's in HE double hockey sticks. She didn't say that part. I'm adding that part. Now, regarding Cathie's continued discussion, she talks about, look, the way she buys is not momentum driven. The way she buys is she tries to look for stocks that, much like when she started in the industry, have fallen through the crack. When people aren't loving a stock, when a stock isn't sexy because people are ignoring it, that's the time to be buying that stock, especially if you have very, very high conviction. And Cathie Wood specifically has high conviction in any stocks that she believes can ultimately be, quote, winner-take-most models. Winner-take-most spaces are spaces like Tesla, where all of a sudden Tesla, with its massive lead, is very likely poised to be a company that takes most of the profits from the electric vehicle space. She enjoys investing in winner-take-most spaces, but does not enjoy momentum trading. Now, momentum trading. This is something very, very important to talk about because there is a lot of conversation about momentum trading, especially on YouTube. It's really sexy to go, all right, we're going to get into this stock. Yay, it pumped. All right, let's sell. Let's go to the next one. This works really well if you're early, but it's hard to consistently be early. And Cathie Wood says, look, when stocks run, that's when we're not investing in them. And this is something that I teach regularly in the Stocks and Psychology of Money group, which you can get in with for 38% off if you use that coupon code HODL down below. Get everything that I think about the way I look at stocks. And I have some differences in the way that I think with Cathie Wood. So I'm not a spitting image of Cathie Wood at all. We have some very different opinions on some things, especially her beliefs on inflation coming. But stay tuned. I'll make a video on my differences compared to Cathie Wood in the future. But anyway, if you're looking for something to maybe change your mindset on how to invest for long-term wealth, definitely take a look at the program link down below. You get me in private live streams where you can ask me direct Q&A every day that the market is open. Okay, so back to Cathie Wood. Cathie Wood makes it clear, no momentum trading. When stocks are going up, we're not buying them. There will always be another opportunity like what we're seeing this week to basically buy the dip. Make sure to follow me on Twitter too, because I sent out a pretty, in my opinion, powerful tweet on buying the dip and why you want to avoid the particular urge. And I give a special comparison there, so check that out at RealMeKevin on Twitter. Anyway, another thing that Cathie Wood does, which I think is very fascinating, and it's actually something that I did a little bit differently than she did here. So Cathie Wood says that when there's a correction, she likes to concentrate into her high conviction names. So I 50-50 agree with her here. What she's saying is she's willing to sell off her lower conviction names and concentrate into her higher conviction names in a sell-off. I do this a little bit differently. In a sell-off, I agree. Concentrate into your high conviction stocks. Today, I invested $150,000 into the stock market. I am buying the dip. And I also sent an alert to all of the course members in the Stocks and Psychology Money group about exactly what I bought. And I also talked about that during the live stream. We went through the rationale this morning on the live stream for that, the private live stream. But while Cathie Wood is saying sell your low conviction stocks and buy your high conviction stocks in the dip, I agree with buying your high conviction stocks in the dip. I prefer to sell my low conviction stocks when the market is a little frothy. In fact, 2 weeks ago, literally right before February 19th, when the market started its recent sell-off, I sold over $1 million of stock. I think if I added up correctly, I'm somewhere around having sold $1.7 million worth of stock. That was me selling off my lower conviction names, or at least lower conviction where some of the prices were. By selling off at those prices, I was able to set myself up with cash to buy in this dip. Did I know a dip was coming? No, but I wanted to sell off my my lower conviction stocks when the prices were high, so I can take some profits and take some sweet tendies, and then look for opportunities again, especially in my high conviction stocks. The timing worked out perfectly in this case. Now, Cathie Wood also says that she is surprised that Tesla moved into Bitcoin so quickly. She mentions that Tesla's got 8% of their cash in. This is true with their $1.5 billion purchase. MicroStrategy is all in and Square is in at about 10%. She believes, look, the only hedge that she really takes, because she was asked about hedging and then went into talking about Bitcoin, which in my opinion is really the only hedge she tends to take, is Bitcoin as a hedge towards inflation. She doesn't really hedge her innovation or tech plays. You know, some hedge fund managers like to hedge those plays by going into something like, let's say, a John Deere or a Home Depot or whatever, right? We hear that often. Those are common hedges to like tech and innovation. Cathie's all in on tech and innovation. So instead of hedging against tech and innovation, she actually doubles down on tech and innovation by going into Bitcoin and using that as a potential hedge against inflation. And she believes if all companies put 1 to 10% of their treasuries or their available cash into Bitcoin, the price of Bitcoin could at the very minimum double, go to 80K, or go up an additional $400,000. That's about, that's if companies put about 10% of their treasuries in. And then she talks about NFTs. So she's really interested in non-fungible tokens. I'm a little lost on NFTs, okay? And I don't want to sound like a boomer here, but it's not just me not being bullish on the concept of NFTs, but I believe there's an inherent risk in NFTs that when and if we have a severe market correction, these are going to be the very first assets to become extremely illiquid because people are going to try to sell these to raise cash to go buy something else, but then there won't be any buyers around. There, in my opinion, are buyers now because people are like, what else is there to buy? There's so much money flowing around. Now, maybe that's different right now because things are correcting a little bit, but she's specifically interested in async. You can Google that, the letter A and then sync, like synchronous, async. And she's interested in this company, Async Art. And this is where you can really invest in layers of art where people can kind of pay a royalty to invest in additional layers of art and modifying the underlying art. But the original artist is always known. It's always on the permanent blockchain record. It's immutable. And this permanent record is something that she thinks is very exciting. She also believes that Roku is going to be the neck-and-neck competitor to controlling your TV with Amazon. She doesn't invest in Amazon heavily right now. She did start investing in Amazon a long time ago. I believe she sees Amazon as more of like an Apple, more of a cash play. She didn't mention that this time, but she has mentioned that Apple's kind of like a cash play. And instead, she sees Roku as that competitor, as a potential winner-take-most option. This is kind of tempting me to buy a TV just to try out Roku a little bit and see what all the hubbub is about, because I do stand a little bit different from Cathie on the TV play. Personally, I think Amazon is a powerhouse here, and Apple is potentially a strong competitor as well. But maybe I'm personally missing something on Roku. So I'm going to go ahead and analyze my weakness and see what I'm missing on Roku. Now, Zoom, I almost sold Zoom at the peak when it went up 10%, the recent peak, when it went up 10% in after hours. But, Zoom is a relatively small portion of my portfolio. It's under 1%. And I was looking at it and I'm like, do I want to pay the taxes right now? Like, maybe I got a little G word where I'm like, maybe if Zoom runs up to 500, I'll sell it. Obviously, in hindsight, now I look at it, I'm like, maybe I should have actually pulled the sell trigger because Zoom has sold off in the last few days in this sort of correction environment. But that's okay. I'm not worried. I want to minimize my tax liability this year. Anyway. I know many people, they say, Kevin, you shouldn't always be worried about taxes. No, you're right, I shouldn't be, but I am focused on buying the dip, and I like buying the dip. Could I have used that money and rotated it into something like Tesla? Sure, maybe. Am I going to at this point? No, I'm not going to sell something when it's down heavily. Almost said Nancy Pelosi. Cathie Wood, totally different video here. Cathie Wood did also double down on fintech, saying that fintech is the most misunderstood industry. And that digital wallets are going to basically gut banks, and that banks are out. That digital wallets, banking, loans, Cash App, these are basically the future. Now, personally, I'm a little frustrated with Square. Square missed some of its revenue projections. That's not good for a digital wallet company like Square and fintech company like Square. So it does make you kind of maybe question some of the valuation and how much credit we're giving companies like Square. And while Cathie Wood might be counting out a JP Morgan, you have to give JP Morgan some credit, even though they might be, the big Goliath in the room and they're kind of the dated infrastructure. JP Morgan's, they're working on their stable coin. They already have the JP coin up and running for their institutional purposes, especially cross-border transfers. And JP Morgan might come in and surprise us as they sort of loosen their company up a little bit. A big downside for a JP Morgan, though, is regulation. For example, JP Morgan can only give you 4 mortgages, whereas a fintech can give you up to 10 mortgages, potentially up to 19 if you're married and you take advantage of some of the tricks I talk about in the real estate investing course, which is obviously separate from the Stocks and Psychology of Money group. But you can bundle the two together. And so, well, I guess the big bottom line takeaway of all of this is do as I've been encouraging. Buy the dip and concentrate. Concentrate on your high conviction names here. It is not the time to sell when things are selling off. Don't follow the crowd in that sense. Don't momentum down and sell and paper hand. It's diamond hand. That's what you need to do. Diamond hand. It's times like this, not when times are green, that we find out who the true diamond handers are and who the fakes are. Anyway, thank you so much for watching, folks. I'll see you in the next video.